All right, welcome back to the program. Joining me right now is Ayodeji Ebo, who is the Managing Director and the Chief Business Officer at Optimus Afrinvest. Hello, Ayo, and welcome to the program.
Yeah, good morning, Nancy, and thanks for having me.
Now, welcome again. Let's get started, really. I know we're talking about capital markets, investing, what you need to know. Let me start by asking you, of course, the first question around the inflation numbers that was released by the National Bureau of Statistics. And I will tell you why I'm starting off with this question later on during the interview. What do you think about April inflation rate climbing to 16.82%, a figure that is very frustratingly high for many Nigerians now?
Yes, thanks for that. It came in as a bit of surprise when you compare it to analyst forecasts. But when you look at it based on reality, we won't say it's a surprise. And when it's easily traceable, you can see that the major item that which is mostly consumed by Nigerians, you see based on the prices of commodity prices. You see the cost of bread increased due to the increase in the price of wheat as a result of the crisis in Russia. We also saw the impact of the exchange rate adjustment impacting on food inflation. So what this is just basically also saying is that there's a lot of pressure on consumer wallets. It's in terms of the purchasing power. So your ability to demand is being impacted on a weekly basis, which makes it sound interesting when we go into our topic on why people should consider investing. So if you look at putting it in layman language, if you had invested 1 million naira last year, or you have put 1 million naira in your savings account last year with inflation rate of 16.8% year on year, it means the value of the 1 million would be hypothetically maybe around 800,000 or 840,000 naira. It means you have lost value indirectly in terms of what the value that amount of savings commands. So that is why it's very important that we need to look for avenues where we can bridge that gap. So it's really not an interesting time for Nigerians where cost of things are going up and salaries are not increasing at that level, which means that in terms of standard of living would be significantly impacted.
Mm. From what we saw from the NBS for April, food prices still is a cause of concern for many Nigerians. According to, I think, the Living Standards report that was released by the same NBS, I think in 2018 or 2019, if I'm not mistaken, that Nigerians spend over 50%, close to 3/4 of what they earn on food. So food prices still remain a source for concern.
Yes, I think that's true, and it shows that when you look at the purchasing power, or when you want to do the per capita income, is still very low. When you look at the hierarchy of needs, referring to my Maslow hierarchy of needs, food is one of the basic things that people want to first of all focus more on before they try to consider other things. And it's really disheartening that because of the low per capita income, when people purchase food to survive, there's really nothing left for any other thing. And it should be a major concern even to the government, because as people are unable to feed, as inflation continues to eat into their little income, it has that strong correlation with insecurity. And that is why you see in developed climes, even when you are not employed, or they feel that you don't have that capacity to feed, to get that basic need. They try to sort it out because they know the danger, the cost that such a person can inflict on the economy.
Now, if we take a look at inflation, it's been stubbornly high, at least in the last 1 year. But some people might argue that Nigeria is not the only one suffering inflation right now because it's a global phenomenon. But I dare also say that we had our own issues before the global crisis came in, talking about Russia, Ukraine, and all of that. How do you see the Central Bank of Nigeria, which is the apex monetary authority that is charged with controlling inflation? How have you seen this apex body? How has it fared in the last 1 year at taming inflation, bearing in mind that the MPR, which is the monetary policy rate, that is one instrument that is used, hasn't, okay, let me not put words into your mouth. Just speak to me about what you think about how the CBN has fared.
Okay, thanks, and a very good question. So when you look at the last MPC, the CBN governor also alluded to the fact that our inflation is more of cost push and not demand pull. So if we are trying to consider the reaction of other central banks to inflation, especially in developed world, so we've seen the Bank of England raise rates since December. They've been raising rates on their interest rates since December. Also, the US Fed has also been raising their interest rates to curb demand. But for us, it is cost push, which means that because of the cost structural issues that we have, cost of doing business, the insecurity that is increasing the cost of transportation, the cost of providing security for your farm, is the major cause of our own inflation. But yes, the external factor has compounded this situation in the form of increase in global prices, especially for commodities that we depend on international community for. But beyond that, I don't think that we would the CBN would increase the MPR to tame inflation due to the cost of our own inflation. If the MPR is raised now, which would have implication for lending rates, that means that the cost of doing business will also go up, and the cost of goods and services directly would also move up, which means that it may also compound inflation. You would see that even in the US, there are a lot of views that there needs to also be there needs to be a balance in the rate hike such that the economy does not go into recession, given the cost push element that they are seeing in their inflation now. You know, when you look at the developed countries on the back of the COVID-19, there were a lot of money injected into the economy. So that spurred demand across board. So now what they are trying to do is to reduce that money supply in the circulation to cut down on demand. But for us, that is not the case. So I would expect that there's a limit to what the CBN can do. It's more of a structural issue that the fiscal authorities should be responsible for, rather than the monetary policy actors.
Okay, Ayo, let's get down to the nitty-gritty. Capital markets investing, what you need to know. I started with inflation because we got that information from the National Bureau of Statistics, so it was really good for us to start on that footing, and it would also affect what I'll be asking you in a bit. But let me start by asking, very elementarily, what is a capital market? I want this show today to be like an informational primer to capital market investing, because when it comes to like capital market, you know, a lot of people don't understand. They say, oh, it's too technical, or how do I get into all of this? So let's try as much as possible to be basic. What is a capital market?
Okay, thank you. So I would say, breaking it down, a capital market, it's a form of market where those that demand, that requires capital, comes to meet those that have the capital. So with further analysis, you put money in the bank as savings, and it is lent out to those that require capital for business. So in the capital, and those that invest in the capital market are those that are the supplier of the funds. So just using another perspective, if I want to set up a business, for instance, and I discover, maybe after setting it up, I discover that demand has increased and I require, like, let's say 2 million naira to expand my business. I can approach the capital market to find those that are willing to invest in my business to raise capital. So in layman terms, it's a market where you raise capital either in forms of equity, which is stocks, or in form of debt, which can either be bonds or can be commercial paper or any financial instruments that you are given to show that you have actually borrowed someone money. So you see, when you invest in bonds, for instance, in the capital market, you lend money to the government. If you invest in commercial paper, you lend money to the corporate. If you invest in stocks, for instance, too, you are also giving money giving money to the company, because when they come to the market, they sell those shares for a certain amount before it begins to trade. So it's a way where you try to, it's a market where you try to invest to add value to your savings and also to raise capital to support your business.
So there's a distinction between the stock market and the capital market, isn't it? And I know why I'm asking the question, yes, because some people may not know the difference between a stock market and a capital market. The stock market is a subset of the capital market.
Okay, you are spot on that. The stock market is a subset. So the capital market is the broader name for the different form of capital raise that you see in the market. So under the capital market, you have the stock market, you have the fixed income market where you raise bonds. So for stocks, it is investors trying to raise money for their business. So there are two forms of capital that can be raised to support your business. You can either raise capital using debt, that means you borrow money and you pay interest, or you raise it through equity. So you become an owner of the company. You have that vested interest. You become an owner and you're a part of that company when you buy the shares or you invest. But it's also good to note that they also have their different characteristics. So it's good to understand the risks that are risk reward that are involved in both. I believe that we'll also get to that in the process of this interview.
Mm. So if I'm to summarize what you've really said, I'm trying to be as basic as possible and also understand you to be able to relate to the viewer. The capital markets are financial markets that bring both buyers and sellers together to trade stocks, bonds, currencies, derivatives, and all of that. If we have time to get into all of that, we may be able to get that. So is that what you're saying?
Yes, correct. But I would like to also add that it brings the user of capital and the provider of capital. So you have those that have excess in form of savings. They are looking for where to put it. And you have those that have the ideas, business. So it brings them together as a form of financial intermediation, but that's not to use that terminology so that it doesn't sound complex. But you are coming together. It's just to an intermediary between both of you so that there are no issues of getting your funds back. So there are people that would provide those that need this capital. They will come to a market. And there are people that have excess money to invest. They also come to that market. So where both of them meet can also be called a capital market.
Okay. Apart from the stock market, which you've mentioned, and you glossed through the bond market, are there other types of capital markets? Is that, yeah. Are there types of capital market?
Also, the capital market, we can say a capital market is also a subset of the financial market. That's the broader name. So in the capital market, which relates to fundraising, where the instruments that are used to raise funds are traded. So for capital markets, you have what you call the primary market and the secondary market.
Yeah.
For the primary market, this is where when instruments are issued newly, so for the first time. So for those that are used to stocks, you would hear of what we call public offer. They come or private placement. They come to issue shares for the first time, and people buy and invest in those shares. Also, in the primary market for fixed income, you would see that government will come, they will hold auctions, and people would invest in those instruments, which is like borrowing, lending money to the government for the first time. So once investors in the primary market, when they buy those instruments, they take them to the secondary market to sell. And when you are selling, the target or the objective is for you to sell at a profit. For instance, if you participate in a public offer and the company sold the share for 10 naira, your target is to sell it at any price above 10 naira. So you go to the secondary market where it can be traded, and you tell people, I'm willing to sell these shares at 12 naira. Someone may offer you at 11.50. So you begin to trade the shares. So and the price is now established. And for the fixed income too, you see those that buy at the auction, they buy at par. If it's a fresh issue, they buy at par, which sometimes can be 100 naira or can be 1,000 naira based on how it's structured. And you want to sell. So if I bought a bond or a bill at 100 naira, my target is to sell it above that price. And but there's also the way it works. So when I'm selling in the secondary market for stocks, I want to sell at a higher price. When I'm also selling in the fixed income market, because of the way price and the yield, the return that you get, you want to sell at a lower return, which means at a higher price for you to be able to make money in the fixed income market. So by and large, not to make this like a technical session, is a market where people come to resell securities that they bought for the first time in the primary market.
Yes, that's what the secondary market is about. Where you can exchange securities, where you can buy stocks, where you can buy bonds almost on a regular basis.
Yes, correct. You can buy at a regular basis, and you would see that for the primary offers, they have time. It is not every day. So there's is when the company decides they want to offer the shares for sale. MTN offered shares for sale in December, and we don't know when the next one would be. But all those that bought those shares in December have started trading them, either trying to sell or trying to buy more in the secondary market at a particular price. So for the secondary market, the market opens on a daily basis, and prices are determined based on demand and supply. And what that means is that when you have a lot of people that are trying to buy a particular instrument, it means the price will go up. And when you have a lot of people trying to sell that particular instrument, it means the price will go down. And when I say instrument here, it can be stocks, it can be bonds, it can be treasury bills, it can be commercial paper, it can be derivatives. Okay. Demand and supply is what determines is one of the major variables that determines the prices of these instruments in the secondary market.
Okay, that brings me to the question which you've just said now, the different instruments that can be traded, that can be bought or sold at the capital market. Let's quickly just gloss through over some of them. We have shares, we have bonds, we have debentures, debts, and all of that. I will want you to take a look at each of them and explain how, for someone watching or for someone listening right now, can take advantage of what they mean, really, because I've seen many people tell me, Nancy, I don't even understand I don't understand what you do. I don't understand what you say on air. You know, so I'm like, it's simple, and you should also be interested, because you go out every morning to look for money. So that money you look for, also get knowledge to be able to, you know, not just earn, save, and invest. So over to you, Ayo. Can you just take us through some of those financial instruments?
Okay, thanks. And I would like to start with stocks. And the first thing we need to know about stock is that you are trying to own a particular percentage in a company. So when you buy a share, you become an owner of, a part owner of that company. And there are two types of return that you get when you invest in shares. The first one is what we call capital appreciation. That is the increase in the price. So you buy a stock at 10 naira, and when it gets to 20 naira, when you sell, you would see that there's an increase of 10 naira. That 10 naira is your income that you make on the investment. Secondly, there's the dividend income. So companies declare dividend periodically. Some do it quarterly, some do it every 6 months, and some once in a year. When they pay dividend, it is an income to you. So a company can declare a dividend of 1 naira, assuming you pay 10 naira for that share. You would see that the return on that investment is 10%. That's 1 naira dividend that you have received per share that you have bought, divided by the share price, which is 10 naira. That is a return of 10%. So when you had the return of that 10% plus the return that you get as a result of the share increase in share price, then you have your total return with stocks. One thing we also need to note about stock is that the return is not guaranteed. So when anybody is approaching you that come and invest in stocks and they are guaranteeing you a return, you should know that it's a Ponzi scheme, because return is not guaranteed. And I would also like to add lastly on stocks, it is good to invest for the long term. Invest in companies that you understand the business that they do, and also try to monitor their results that are published on a quarterly basis. So once you do that, you'll be able to know how your stock would perform, because it's their financial performance, which is their result, is always tied to their market performance based on the way investors will perceive them. And now to fixed income. From the word fixed, it means that you know the return that you will receive. It means that you know when the investment will mature. It means that you know the total interest that you would earn from, and that is why the word is called fixed income. And there are different types of fixed income instruments. The first one that I would like to talk about is treasury bills. Treasury bills is a debt instrument that are issued by the government to finance the budget. So it's when you invest in treasury bills, it's like you are borrowing money to the government. But it's one of the safest form of investment, because we know that these instruments are issued in naira, and if government, for instance, are unable to pay, the CBN would come to their rescue to support. So it's one of the safest form of investment, and the return is guaranteed. Treasury bills are discounted instruments that gives you access to earn in upfront interest. So when we say upfront interest, so when you invest 1 million naira now, and the rate is 5%, that means you're entitled to 50,000 interest for that 1 year. That 50,000 interest would be given to you now, and at maturity, you would have your 1 million naira back. So it gives you that ability to earn upfront interest, and it's very safe. It can be traded both in the primary and the secondary market. In the primary market, there are auctions twice in a month, and sometimes can be 3 times in a month. You can, and the tenors that you would have, which means the maturity of the investment. You have the 91 day, the 182 days, and the 364 days investment. So, and these instruments are also now traded in the secondary market. So in the secondary market, those that have participated in the primary market comes to discount to sell it to make more money in the secondary market. And the market is open on a daily basis. Now to commercial paper, which it works like treasury bills. Commercial paper are also debt instruments and are discounted instruments. The main difference is that commercial paper are issued by corporations, corporates, likes of Dangote Cement, MTN. They issue commercial paper, but treasury bills are issued by government. So you would see that, you know that MTN cannot print money, Dangote cannot print money, but we know because of the size of the company too, they cannot default. But because they cannot print money, they would issue their own instruments at a higher rate compared to the treasury bills. So if treasury bills is trading at 4%, corporates will now issue at maybe 5% or 6% or 10%, depending on their rating. So you can also make more money when you invest in commercial paper. Moving to FGN savings bond, federal government savings bond, which was launched about 3 or 4 years ago, with a minimum investment of 5,000 naira. It is issued through an auction on a monthly basis. This is available to everyone. And the interesting thing about FGN savings bond is that compared to other bonds that pays interest every 6 months, FGN savings bond pays interest every quarter. It means that you have something that comes to you in form of return every year. So if the interest rate is 10%, and for 1 year you are supposed to get, if you invest 1 million or you invest 100,000, so that, let me use a smaller number, your interest is 10,000 naira. They will divide that 10,000 naira divided by 4. So you'll be getting your interest every 3 months, 2,500 naira. And the tenors, which is the maturity of the instrument that are issued for FGN savings bond, are 2 years and 3 years. So it means for the next 3 years, you'll be getting that particular amount, 2,500 for 3 years. And at maturity, your interest will be paid back to you. So that is accessible to everyone. And lastly, that I will mention is on FGN bonds. Due to the size, the minimum investments can be as high as 20 million for FGN bonds. So that may not be available for everyone, but it also is also a safe investment because it's issued by the government. Corporates also issue bonds that you can also look at. We spoke about, you mentioned the ventures. It's a form of debt, unsecured debt instruments that are also issued. So what I would say in summary is that all these form of investments is just an avenue for you to earn return on your savings. With inflation rates at 16.82%, it means that you cannot afford to leave your money just idle in your bank, earning zero investment. So even if you cannot earn 16%, if you earn 5%, if you earn 10%, it means that you have reduced the impact
of inflation on your money,
on your savings. That should be the focus. And depending on your risk appetite, some people can take a lot of risk and some can't take risk. So you also understand the type of investment that you are doing, that you want to invest in. So it's good to understand them. But by and large, investment is key. It's a way that you can be able to you can be wealthy, is a way to make your money work for you, is a way towards financial freedom. So investment is key. Yes, we may not have the time to go into details, but there are a lot of platforms that you can follow to learn about investment. When anybody recommends something to you, go there, do your bit of research. And I would like to just emphasize while I wrap up that in the period where interest rates are low, they Ponzi schemers take advantage of that and they come up with different schemes. So when you hear schemes that are paying you return daily, paying you return monthly, are paying you a return weekly, you should run. And when they say it's guaranteed, the first thing you should ask for, where are you putting the money? So even if you are trading FX, FX is not guaranteed. Even if you are trading crypto, you are trading stocks, they are not guaranteed. It's only when you invest in fixed income like treasury bills, commercial paper, that you can say your return is guaranteed to a large extent. And wrap up, mutual funds, to note by regulations, don't give guaranteed return. It is based on the performance of the instrument they have invested in that determines the return on mutual fund. And that is why anybody investing in mutual fund should also create time to monitor the performance of those mutual funds. You don't just put your money and you go and sleep. I think I would stop here for now. Thank you.
All right, Ayo, let's take a look at the downsides of all of this. Thank you at least for talking about the inflation side. So we came to that. That was why I said at the beginning of the program, I started with inflation so that Nigerians listening and watching can have an idea that you shouldn't just leave your money in the bank idle. That is the biggest mistake you should do now. I know that the banks will not be liking me for this, you know, but that is the truth, because your money is not working for you in the bank. So look for where to put your monies, different asset classes, and let your money work for you, not Ponzi schemes. But are there downsides to all of this that we're talking about? Because what has an advantage also has a disadvantage. And for the fact that in our educational institutions, personal finance and even investing is not really taught, not just even in educational institutions. You will see even professors don't even understand the rudiments of investing, have not even started planning for their retirement. 2 years into their retirement, they are running helter-skelter. Oh, what do I do? But you had 35 years to plan your life. So that's why shows like this are really important. So what are the downsides, Ayo, as we close?
Okay, thank you. So one of the downsides of investment, I would say, is that there's a potential for some investment to lose part of your capital. And that is why I mentioned earlier that it depends on your risk appetite. There's this slogan in investment: the higher the risk, the higher the return, or the higher the reward. So most investment that would offer you very low return would also come with very low risk. So for fixed income, you may say, I'm not too comfortable with 4%, 5%. The question you have ask yourself is, are you willing to take more risk? And if you want to take risk, if you know that there's an element of risk, like Nancy spoke about, you have a portfolio. So you can say, because I don't like a lot of risk, out of my total 1 million naira savings, I can only put 50,000 or 100,000 in this form of investment. Stocks, for instance, can give 100% return, and you can also lose significantly in stocks. But if you take your time and invest in stocks with fundamentals, and you diversify, because when you invest in stocks, there's no obligation for them to pay you dividend. And when that company goes under, you can also lose your money. So you invest in stocks that you understand the business that they do. Secondly, when you invest in fixed income, in government instruments, I can say, at least for now, you can go and sleep. It is risk-free. There's no risk, in quotes, that is attached to it. You can, but when you, like, for instance, you invest in crypto, for instance, which is very volatile, you can lose all your money. So if you have to invest in it, it means that you can quantify or use what you feel you can lose investing in that. There are also different schemes that are up there, but you need to do your due diligence. Investment in real estate, we all know liquidity is the main issue. And also, if you are not savvy, that means you have a lot of experience in investing. Investing in real estate can be tough because you need to do your due diligence. So don't just, a lot of people are invested in forests that will not develop in the next 50 years. So there are things that are involved. Those are form of the risk. You can lose your money. But It's also good to match your risk with your age. If you are just starting, you may be able to take a lot of risks, because if you lose money, you learn and you get better. But if you are approaching retirement, there is no chance for you to take risks. Taking a risk with investment in agri, in real estate, in other things that are not fixed in nature and doesn't have high form of that, and they have high form of return, then you should run from them. You should be, should be your focus is what we call capital preservation. That even if you are not making much money on your savings,
Let my principal
you
be
need to
there.
preserve your capital because you don't have much ability to work more. So by and large, life is about risk. There's risk that is attached to investment, but doing nothing is even a risk, because if you remember the factor inflation, it means that your savings is being depleted on a daily basis.
On a daily basis. Thank you very much, Ayo. Inflation is a thief. And inflation at 16.8% in Nigeria, it is a thief. So guard yourself against inflation. Thank you, Ayo, for today's program. And we'll continue to do this and at least inform Nigerians on credible, regulated ways of investing. So thank you. I've been speaking with Ayodeji Ebo, who is the MD and the Chief Business Officer at Optimus by Afrinvest. You've heard all what we've said, at least in the last few minutes. Try as much as possible to get knowledge of your own. Find financial advisors that can actually advise you. And if you want to do that, look for credible investment houses or investment companies to do that with. I am Nancy Naji. Be the best you can be and be that change that you want to see. I'll see you all again next time. Bye now.